level. So hypothetically speaking, if rupee were to depreciate or appreciate steadily over a period of 1 year to 65 or 55 levels, we would expect RBI not to intervene if it is gradual and steady.
I don't know. If you are trying to at least find an indirect way that I will try to commit to some level, I am not committing to any level.
Sir,
Thank you, sir.
I am Jairam Krishnamurthy, Venkatesh colleague. However much we like or dislike, the influence of offshore market cannot be ignored on our onshore market. In times of volatility, particularly when rupee is depreciating, we have seen that market onshore closes at a particular level, offshore trades in a very wide range. Next day, we have seen it opening even 1% beyond the rate at which it closed in the onshore market. So the local importers, particularly in a depreciating scenario, are at a great disadvantage. And when no trade has taken place in a particular range, next day he has to go and hedge at a level which is 1% higher than where he closed today. So is there a thinking in the regulator to extend the foreign exchange treasury services hours so that there is a level playing field available for the end users? Thank you, sir.
See, first of all, we can argue for the rest of the day, although the Reserve Bank of India, as one of its own publications, put out a report stating that the NDF market in times of volatility when the rupee is depreciating has influenced the rupee rates. But again, the issue is genuinely I don't know how we take, despite all those statistical models that have been put into the whole thing, when your market closes at 4 o'clock, when the rest of the world is taking a view on the rupee, and then there is a rate available, in a volatile situation, the market also always tends to look at a rate to quote for the opening quote. So they open the quote which always mimic the NDF closing rate or something around that, and if they think that the rupee is going to be more volatile, then they probably quote few paise lower also. Now that whether that can be conclusive proof to say that the NDF has influence on the domestic market, I think that's an argument which can be stretched, because ultimately it is only that market which assures a central bank liquidity or functioning that can be the real driving force as far as the market is concerned. You can argue the other way around. The question is, now they say that in an appreciating scenario, it is the domestic market which drives the NDF market. So how this link gets into the opposite direction is an argument that we can go. Now your question was not questioning this linkages, your question at the end of it was that whether Reserve Bank of India is prepared to extend the trading hours. Now by extending the trading hours, if we think that the link between the NDF and this market is going to be reduced, first of all, I am not a person who is convinced about that. And secondly, when we are talking about a market for quoting, are we talking about the forwards or we are talking about any kind of spot transactions, term transactions?
At least the spot risk.
Huh?
At least the spot risk.
No, if you are talking about the spot transactions beyond the market, now which market works on a 24/7 basis except the market which has no capital controls? I don't know. You give me an example. We are talking about US, we are talking about Euro, we are talking about Japan. Which other currency works on a 24? Every country has a closing. And secondly, in a case where this is extended not only to the foreign exchange, it is extended to the commodity, it is extended to the others. Now, for all the others, now we are tending to take a stand that if you do not want the Reserve Bank of India repo to be kept open till 8 in the night, you do whatever you want. But ultimately, that will come back to haunt, because at some stage there will be a logjam. So a market functioning without central bank being available to as the lender of the last resort, whether it is forex market, this market, that market, it is problems. So first we'll have to decide on that. Not that Reserve Bank says that 4:30 it has to close because it has to go home. The question is how many such cases are coming? And just because we think that there is a link between the India market and this market doesn't mean that we should go home at 12 o'clock in the night.
Thanks.
Good afternoon, sir. My name is Leelanand. I was an ex-banker till last week. This week only I joined a consultancy company. One of the points RBI has allowed is allowing invoicing in Indian rupees and allowing non-resident entities to hedge it through AD bank. Somehow it did not pick up. In my view, I think volumes are not picked up. Though there is a huge scope.
Although I knew when I signed the circular, it will not pick up.
Yeah, then I was there in one of the discussions also with you as a bank member. See, at that time also what is being debated is when an FDI or any person who is having interest in India, who wants to enter India, he can hedge only after getting all the approvals. That is also up to 6 months. Now, what the offshore market, to my understanding, is that people, when they have an interest, they'll start immediately taking the positions. That is where the NDF market is also thriving on the banks also ultimately adding to the volumes. And Indian parties, to some extent, trying to do the arbitrage also with the interest rate, whatever the forwards are there. So if we allow all the entities who wants to hedge rupee through AD bank, we are kept under the circular, still they have to give the documents and they have to scan the documents, and there are restrictions on the cancellations and rollovers. At least if you remove all those restrictions, because for a non-resident entity, while hedging through NDF markets, they don't want anything. So if we can make it as simple as that, still the volumes happens through AD banks, then my sense is we'll be able to bring some of the offshore volumes to India.
See, I completely agree with you, but the reality cannot be, if you ask me whether we can exactly mimic the NDF market, probably my answer is no. But ultimately, we have to say that we have to allow some kind of freedom to make sure that if I know that after this freedom, 80% of the people are doing this transaction as genuine hedging transaction, maybe 10-20% may be taking a punt on the rupee, that's a situation which is manageable. But if I say that you come and punt on my currency, any point of time you book and cancel, there's a problem. Exactly. So we need to work out some area, volume or anywhere around, we have to say that these kind of freedom will be reviewed on an annual basis to see how much if you cancelled, you booked a profit and took away the money. Because there also we cannot say once we allow it, you cannot take away the profit. You should be allowed to cancel and take away the profit. So this again is work under progress, how this can be done to make sure that many of these transactions which are ultimately genuine transaction, but there is a timing problem because of the documentation, how this can be brought onshore. So because recently one of the things which these ADs raised in the Agra conference was, has that been issued, Ms. Rai, that coupon hedging for 12, that has been issued, okay.
Sir, my name is Vipul. I am from Samarth Diamond.
From?
Bankers are Samarth Diamond.
Hello.
We are manufacturer and
Last 3 questions. Continue.
Okay. Bankers are charging for loan processing charges is from 0.5 to 1.5%. Is there any cap? RBI is aware of that or not?
No. Normally Reserve Bank has got away from all this micro charges, but again I am saying that the way, if the charge structure is getting unreasonable in the market, the way forward is that this self-regulatory organization has another advantage. That becomes a single point of contact for the regulator. Otherwise, regulator obviously cannot go into various sectors and start speaking. It becomes very difficult. So I would think that tell the audience that if here you have a real problem in respect to the charges or the insurance or the premium that is getting paid, I think you need to sort of take this on together rather than individual cases. I think we would say individual cases the central bank cannot intervene.
Thank you, sir.
Sir, myself is Vishnu Gupta and I am working with GSCL Limited. My question is, if a company who has a export turnover of $100 million per annum, so what will be the strategy as per your experience and your expertise, how they should cover the risk of...
Ask that lady, she is the consultant, I am not. I am the central banker.
If you are the MD of that company.
Next year I will retire and then I will take up the consultancy.
Hello. Hello. Sir, this is Maulik here from Almus Consulting. Just one last question before we close for the session. We have seen one of the objectives of RBI is to manage the volatility in the market. Now, dollar rupee is a high yielder, and considering the stability, too much of a stability brings instability. Are we seeing a systemic risk, especially for the importers, the foreign currency borrowers who would be absolutely complacent not to hedge because there is too much of a stability? Are we seeing a risk?
See, the point that I have made that my earlier speeches, let me now try to sum up. I am saying that we should now be prepared to have a new normal where the volatility will keep coming and going, right? So there you will have to strategize yourself that risk management is not all about punting and praying. If you punt and pray and that is your risk management, then you will have to take the new, whatever, wherever the market goes, you will have to take of that. So clearly, now we have reached a stage, irrespective of the size of the company, this perhaps answers the question this gentleman raised also in a very general way, we'll have to take cognizance of what is the kind of risk that I can take on my balance sheet. My job is manufacturing, my job is export, my job is import. I am not in the job of exchange rate management. So I will have to take a view what is the kind of hit that my balance sheet can take. Accordingly work backwards and say what percentage of my payables or receivables should always remaining unhedged. Now to say at that appropriate time and say that had I not hedged, I would have been better off, is like the old story I used to say, to take an insurance and feeling bad that you are not dying. You cannot say that. So that is what risk management is about, and it should be understood it in that way. Then the question arises that today, whether the country, this is one of the questions that was raised I think in the earlier forum, how Reserve Bank of India tries to manage the Fed. I mean, unfortunately, Reserve Bank of India cannot manage the Fed. So we will have to manage the Fed's actions. So today, I think this is something which has been repeated. What was the problem there? At that point of time, there was an issue whether everybody started suspecting, and although we had even at that time more than 250 billion of reserves, that whether Reserve Bank of India has enough ammunition to stabilize the market. Today we are talking about $315 billion. So today we are much, much better prepared to tackle any kind of market movements as and when or if and when that happens. But I cannot take a prediction whether it will happen or not happen. Because I think even US Fed, the different Feds talk different languages. So nobody really knows how this whole thing is going to move forward. But we must be prepared for that. But the preparation is not waiting to see what that fellow does. You take decisions internally, what is the kind of risk that I can take and what I need to hedge and not hedge. And there, if you want some kind of facilitation because certain policies are restricting your actions, come back to Reserve Bank of India. Don't ask Reserve Bank of India to predict whether there will be volatility, whether Fed will do this action tomorrow or after 3 months. We don't know.
Thank you so much, sir.
They have switched off, being the last question.
Hello, sir. So myself, Hiren Sharma, part of the Anand Rathi FX Advisory. So my major question is, because it's been cohesive association for this particular seminar between ARC and NSE, my basic question, sir, because it would address at least all the queries which has been raised in terms of the pricing to what the bank offers in terms of conversions. So when would actually the deliverability in terms of the exchange contracts would happen, sir? Is there a possibility?
Deliverable.
On the exchange contracts, NSE, for example, NSE future contracts which are there. So it would actually address, the number of queries which, everyone had been raising in terms of the corporate side of it, the bank side of it. So I wouldn't be there that a best solution to have, and the accessibility also.
See, we have no views on whether the futures contract should be made deliverable or not. But the futures contract not being deliverable, we are conscious of the fact that if it is not deliverable, if those contracts are very genuine, where ultimately I am trying to buy and sell, so that doesn't in fact answer the issue which we started with, the SME's problem. The SME could hedge his exchange risk in the futures market by doing this transaction, so the rate is protected. But when he tries to buy actual dollars in the OTC market, still he could be hit on the rates. So that leads to the issue of whether this can be made deliverable. We have no views on that. If NSC thinks or somebody thinks that that can be made deliverable, they can work towards a model. I know my friend here tried to work out a model, then it never took off. Ultimately, one of the things that we have made very clear is that the issue that was raised is that whether central bank will act as the lender of last resort in case there is a problem. I said there is an issue there. Because central bank becoming lender of the last resort or assuring that for the FX market would be a problem, because that's a conscious decision that the central bank has to take. But other than that, if you want to put together a model and move forward, we have no issues on that. In fact, we are thinking probably in terms of, a completely open position, or because today also we are internationally, though I touched on that, I didn't move towards that, collateralization is starting to happen in OTC market. So the differentiation between these two markets will gradually die down once you start collateralizing, marking to market all your OTC positions. So that's a position that we must be prepared for. Okay?
Thanks.
That's a question?
No, sir. Thank you so much, sir. I request our co-founder, Mr. Maulik Shah, and co-founder, Mr. Jairam Krishnamurthy, to come up on stage, please.
Thank you. Thank you very much.
Thank you, sir, for sparing your valuable time, and you made this seminar to a different level, and today you see this big number. It is you are accepting to come and share your views. Thank you very much.